Hello, welcome to IG's Week Ahead. There's plenty to watch out for, plenty on the earnings front and also on the economic news as well. Let's just start with the econ side of things. First up, we've got industrial production and retail sales and consumer confidence figures out of Japan. China updates on its manufacturing and services PMIs. And the Eurozone, we also get Q2 GDP growth numbers from there, particularly interesting after surprisingly strong GDP numbers out of the US, and also the Eurozone's consumer price index will be interesting for the ECB too. On Tuesday, we got a rate decision out of Australia. Particularly interesting given the Fed and the ECB as expected hike rates. But Japan, however, is now surprising on the monetary loosening side. We also have the China Caixin manufacturing PMIs and the unemployment rate out of the UK. Plus from the US, look out for the JOLTS, the ISM manufacturing PMIs and the crude oil inventories, the API ones. Midweek, we've got the Bank of Japan minutes. Employment change numbers, these are the ADP ones out of the US, and the crude oil inventories, the EIA ones, of course. And towards the latter half of the week, we've got the China Caixin Services PMI, trade balance numbers out of Germany, a Bank of England interest rate decision, no less, and also initial jobless claims out of the US and factory orders. And on Friday, the big set piece there, non-farm payrolls out of the US. And of course, we've also got the Halifax House Price Index out of the UK. Now, the non-farms, particularly interesting, especially since JP and the gang decided to, as expected, raise rates this week, leaving the door open to more. But the markets seem unconvinced. It's also a big week on the earnings front from the US. We've got Amazon, Apple. Let's cross live now to Tasty's very own Tom Sosnoff. Tom, before we start, thanks for joining us from Chicago. How's the weather going there?
It's pouring rain sideways this morning, but you know what? We've had actually a really nice summer, so I can't complain.
Right. The big set piece earnings news out of the US being Amazon and Apple. What do you think investors are going to be looking out for?
Well, I think investors are going to be looking out for the fact that both of these stocks are pretty rich. I mean, there's a lot of juice, a lot of premium built into both of these stocks. There's a lot of, in the option markets, there's a lot of upside skew. In the pricing markets, they're both at the high end, near 52-week highs. So I think that, so far, most of the tech earnings, except for Meta and Google, have been disappointing. So disappointing in the sense that they just haven't met these, kind of outrageous expectations the markets had for them. So I would expect kind of more of the same. I think the upside in Apple and Amazon are limited. I would expect the pattern to continue. They're pretty rich right now.
And Tom, if we don't get really a surprise in terms of numbers on the upside and more news about incoming revenue generating items and products in the pipeline, given we've had all this AI boost in the markets, do you think we could see a disappointment?
Yeah, I do because, these earnings calls have really gotten into this. How many times can we use the term AI in a 17-minute earnings call? I think the other day in Meta, we counted something like, 64 times or something. It's kind of a joke at this point. I mean, everybody knows what the technology is capable of. And I think, again, just like I said before, I think that AI is fully priced in to Apple right now, almost trading at 195, and it's fully priced into Amazon, trading this morning over 130 pre-market. So I don't think like any of these stocks are cheap. I don't think there's going to be upside surprises. I think if there's a surprise, it's probably to the downside. But again, these stocks they're fully priced here, so it's going to be interesting. But they're rich. The Nasdaq's rich, so let's see what happens. There's a lot of complacency out there.
How about non-farms, Tom? Could we see a surprise there too? I mean, the last reading that we had showed that the US jobs market had the smallest gain since December 2020. Do you think we're going to see a continuation of this trend?
Well, I'm not really someone that follows. So I'm not somebody that really follows fundamental or technical analysis in the sense that I'm an efficient market theorist, so I believe markets kind of have things priced right. I think the risk in the market right here is that in the US, the bond market has got down to the 124 level. Yesterday it was in the 123 level. We haven't seen those prices in months, and we haven't seen those interest rates, both short term and long term. So I think the biggest non-farm payrolls issue here is, how does the bond market react? Does the bond market stabilize here and go a little bit higher? Because if rates go significantly higher from here, the market is not priced for that. If rates stabilize here, which could happen off non-farm payrolls, it could be bullish for the market. But I think the key here is to watch two things. The key is first to watch the bond market, and you can watch bonds or notes, either one. And the second thing is to kind of watch volatility here. If volatility continues to crater, I don't think the market has much downside. If volatility holds its ground here, then I think there's a little bit of risk in the market.
Thanks very much, Tom. Tom Sosnoff there for us from Tasty in Chicago. Very interesting there. Money markets are pricing and implying that traders think that the Fed is near the end of its rate tightening cycle. And also the bond markets also key for us, and volatility still falling, as Tom mentioned earlier. Now, it's huge on the earnings front, both sides of the Atlantic. We've also got on Monday, first half earnings from Pearson, Heineken and Avis budget out with Q2 earnings. On Tuesday, we've got the energy majors back to the fore, BP out with Q2 earnings, and Greg's HSBC, Caterpillar, and Pfizer as well out with quarterly numbers. Wednesday, look out for Qualcomm, Kraft Heinz, big consumer names out of the US, and also not forgetting Robinhood Markets and Helion. And in the back half of the week is when a huge amount of action takes place. We've got Apple, another big tech to look out for, Amazon as well, Airbnb, Coinbase, and Moderna as well. And last but not least, on Friday, look out for numbers from WPP. This gives consumers and investors a real sense of where advertising growth and revenues are heading, along with numbers from Germany's Commerzbank.